I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO of Inc. Research. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, Jim, thanks for having me back.
Ted, good news for people who invested in the Canadian stock market?
Well, in the last 6 months, for the period that ended May 31st, Canadian stocks, believe it or not, are actually winning the trade war. They have actually outperformed U.S. stocks, and you can look at it on different asset classes. For example, if you look at the big stocks, if you look at the TSX 60, it was up 4.8% in that period versus the S&P 500, which is down 1.4. Our mid-cap oriented Canadian Insider Index, it was down a touch, down 0.7%, but the U.S. mid-caps, as measured by the S&P 400, they were off 4.4. Now, that's all in local currency terms. And if your listeners are interested, you can go to our CanadianInsider.com website and look at our Insights newsletter. Believe it or not, Canadian stocks are winning the trade war. So it's been some good news. Now, why I think that 6-month time frame is particularly important, Jim, as you may remember, 6 months ago, last weekend, was when we had what I would call sort of the China takedown, where we had not only did you have the CFO of Huawei being arrested at YVR here in Vancouver, but you also had Donald Trump meeting with the Chinese leadership after the G20 in South America, basically giving them an ultimatum to cut a deal in 90 days or they would get more tariffs. So it really entered, I think, a very tense period, ushered in a very tense period that we hadn't seen before. It was a bit of a phony war before, a little bit of tariffs, a little bit of posturing, but that was the weekend where everybody got down to business, handcuffs and all.
And since then, so even though China has put pressure on Canada, they're not buying our canola, they've stopped buying some certain pork products, we're still doing okay?
Certainly our market seems to be doing okay. Now, I saw a very interesting chart that was tweeted out by a lady who goes under the handle Ninja Economics. You can go on my Twitter feed if you want to take a look at it. But it was from the Financial Times, and it was based off of research that was done by Justin Wiedner at the Deutsche Bank Global Research. And he was looking at tariff rates of the major economies in the world. And believe it or not, now this is another one that's going to have the Canadian equity and Canadian economic perma-bears head spinning a little bit. Canada, now, after what the U.S. has done with its new tariffs, Canada is now the freest trading country in the developed world. We have the lowest tariffs. Yes, it's true. According to this research, believe it or not. So, we do hear a lot of gloom about Canada. I hear it all the time, how awful things are. Yes, we do have our problems, but trade on a relative basis, is not one of them. Yes, we do have, the issues with the new free trade agreement not being ratified yet in the United States, but overall, relatively speaking, we're going in the right direction here on trade. On our deficit, our federal deficit. Well, we debate it a lot in Canada, which is good. It is still relatively low compared to the rest of the world. So, I think part of the fact that we do have a low deficit compared to everyone else is a testament to the public's focus on it in these elections. So that's a good thing that we're still talking about it. However, what doesn't get a lot of attention is our relative strength in the world on some of these things. And Lord knows, I hear a lot about the negativity, so we don't have to go through all that list again. You just have to go on a Twitter feed, or you have to, just pick up a newspaper, and it won't be long before you hear all the bad news.
Well, of course, with a federal election just a few months away in October, we're going to hear a lot of negatives promoted to try to bring down the current government. Are we going to hear about the positives that have been done?
Well,
and are going on?
The current government will I'm sure will try and, I think they'll try and spin some positives and news out, but, whether they get lost in their own ideological mantras about, who knows what's going to be on their agenda this time. I don't know. We'll have to see. That's Justin Trudeau's job to promote his the economic record, and it's up to the opposition, of course, to criticize it, and hopefully they'll criticize it constructively and not end up pandering like I'm afraid the Conservatives are going to do to the real estate lobby, and just say, well, Justin Trudeau, to put in all these awful stress tests and the like, and we have to get rid of those. Well, that would just be a pandering move that, would just, unfortunately, be a turn in the wrong direction. So, we'll see how that evolves. Certainly the Conservative Party has a lot to run on against the Justin Trudeau economic record. But some of the numbers, some of the underlying fundamentals, Justin Trudeau could also point to as being accomplishments. So it could turn out to be, I hope it turns out to be a debate on those issues, Jim. I hope it doesn't degenerate into, Muslim extremists versus white supremacists sort of an abortion. I hope those don't become the three hot button topics of the election, because that's the last thing we need, for our future. We need to talk about the real solid issues in the economy, and there's some, that we could have some good debates there, and it would help the overall country in the medium term, and help my kids more than if we're going to have a bunch of discussion about the hot button issues that no one's going to change their mind on.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back. We're speaking with Ted Dixon. Ted, are peas replacing pot as the hot new investment?
Well, there was that high-profile IPO in the United States, the Beyond Meat IPO, which got a lot of attention. And what we saw here in Canada in our June Top 40 report, which is available on CanadianInsider.com, it's available for a fee, or if you're a member of the Canadian Insider Club as part of your package, you can download it for free. We saw a big move in terms of insider rankings away from marijuana stocks, and I guess there's a lot contributing to that. But we saw all our marijuana-related stocks leave our top 40 list, and we saw an interesting Canadian agricultural company that is expanding with more pea processing and distribution capabilities. And they're doing a financing to move in that direction. So the stock went up and then it's come off a bit, but you can read about that in the report. The stock's a relatively small name, so I'm not going to mention it here on the air, but it was interesting. Maybe we'll start seeing, instead of marijuana leaves floating around Twitter and Facebook and the like, maybe we'll start seeing pea pods pictures instead. We'll have to see. I wouldn't hold my breath too much for that, but certainly it's an interesting change in vegetation in the market landscape right now.
Does that mean people are not going to eat beef burgers anymore, or is this just a healthier trend? I
don't know. We'll have to see. I've had a couple of those Beyond Meat burgers, and I personally like them. But everybody has their own taste, so we'll have to see. But it's certainly I don't know if it'll catch on like the electric car, but we'll have to see.
Well, also, too, the beef producers are threatening lawsuits about them using the word meat because they don't contain meat.
Oh, we'll have to see how far that goes.
Are there other trends like that happening in Canada right now where unexpected areas are getting investment?
Well, I think that's going to be so key, that very question, Jim. I think that's what every investor is going to have to be on the lookout for going forward, because what we're seeing right now, just generally, I think, is a bit of a reset in the U.S. market. Just to come back to that, and then I maybe can get a little bit more granular on your question. But since the great financial crisis, we had the what we call the Bernanke, Obama, Yellen playbook, the boy playbook, and all you had to do was buy the entire market or buy the high-tech sector, the QQQs, and you had these low rates and kind of this ho-hum economy, so you didn't have to worry about rates going up, and everything levitated up. Well, based off of what we're seeing in our signals in the U.S. market, we could be I would put it better than a 2/3 probability now. We're heading for a reset of the U.S. market. I mean, the U.S. market has substantially outperformed other markets over the past 5 years, and particularly Canada. And I think the boy playbook has something to do with that. Now, if that's coming to an end, and we think it is, you could have a number of years of the U.S. market underperformance. This is it sort of gets its act together on the monetary side. Are they going to cut rates? Are they increasing rates? The market's rallied here strong in the last few days, thinking there's going to be a rate cut. Now, why that? I guess there's two schools of thought there. One is, well, money has to go somewhere, so lower rates will force it to go into the stock market. Okay, that's the old boy playbook. But the other side of the argument, which Bob Hoy has articulated very succinctly on your Friday night broadcast, is that if the Fed's cutting rates, it usually means there's something bad happening, and that's not usually good for stocks. So, we'll see how this rally goes, how much further it can go, but I would give it a 2/3 probability that this rally is a bit of a head fake, and that we're in for some tougher times in terms of making money in the market, because the U.S. market is probably going to be consolidating. The Canadian market is a bit of a different story because we're so resource and financial stock focused. So to get back to your question about picking out trends, I think that's going to be very important, and to identify ones that have growth opportunities that aren't particularly overvalued. So we had a big run up here in cryptocurrencies and blockchain. They're giving back some of the gains here. They went too far, but I think that's an area that could pose some opportunities. When last weekend, there's a group called Block One that announced it's going to be launching a competitor to Facebook using EOS blockchain technology. So that'll be an interesting one to watch, how that evolves. So there are going to be pockets like that going forward. And yes, Jim, Canadians should be, and investors should really be, I think, micro-focusing on individual stock stories. And ETFs should be used primarily to hedge on the downside of the broader market risks.
We'll have more with Ted Dixon right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ted Dixon. Ted, what are the insiders doing right now?
One of the areas that they're really excited about again is gold. So that caught us a bit by surprise. We were a bit gloomy on the gold sector, but our gold indicator peaked here. We saw some peak insider buying, which is a positive move, which confirms, by the way, this move up in gold. So we talk again a little bit about that in our Insights newsletter. If people want to take a read on that, they can read a bit more on it. So that's a positive. Now that signal doesn't cover all the miners. It would be more of the gold-focused miners. So you want to, again, be careful kind of where you're going. I think there's still a lot of risks with some of these big, large, integrated miners. We're not quite there on the buy signal there yet, but certainly for a number of gold plays, I think now's a good time to be looking. You've got the Golden Triangle in British Columbia, where you've got a lot of drilling going on. Typically, generally, if you're risk oriented and not risk averse, if you're risk averse, stay away. But if you're a risk taker, a speculator, now is typically the time you want to be looking at those stocks before they release their results, which come in the fall usually or late summer. So yeah, there's some interesting activity happening in the gold space. Good to see. It was looking pretty gloomy there for a while, but this move up in gold, I think it's based on our signals, appears to be the real thing here.
Well, it's great to hear that Canada is the free tradiest country in the world. And that should be positive news for people looking for new avenues of trade. Come to Canada. We don't have tariffs. We have few.
It's very positive. It is very positive. Now, on the flip side, of course, we have some auto parts companies that are caught in this latest Trump maneuver to threaten tariffs on Mexico. So that's not helping the auto industry. So, we'll have to see how that plays out, whether that was a bluster or whether he's serious. I think after a few years of him in office, I think you have to take him more seriously when he puts these threats out there, because he hasn't been shy, certainly, in implementing tariffs. So we'll have to see how that works out, and, so that could provide a headwind to some Canadian auto parts manufacturers, unfortunately, until that gets resolved.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.